Live with the mortgage calculator. Today we're going to go through some live mortgage rates and then we're going to talk about the new FHA loan limits. We'll wait just a minute here to get started. Let us go live on all the different platforms. We did put the chat up on the screen, so feel free to drop a comment there in the chat as you tune in. We appreciate it. I see some people were already tuning in nice and early. Thank you very much. We'll get started here in just a moment. A lot of new things going on here. This week we've talked about a couple new things that have came out. The market is definitely changing a little bit. And lucky for us, rates have been changing a little bit, but we'll see what it looks like today here in a minute when we do the live rates. A little up and down, and we'll see what it looks like here. Thank you for the comments coming in. Appreciate that. And let's see here. All right, it looks like we are live on all the different platforms, so we'll go ahead and get started. We're going to take the chat off the screen, but please drop comments there in the chat as you tune in, and feel free to also ask any questions in the chat as we go through the presentation here today. But we'll go ahead and get started. So welcome, everyone. My name is Kyle Hershey. I'm the COO of the Mortgage Calculator, joined here by our president, Nick Hershey, and our sales manager, Jose Gonzalez. We're a correspondent lender that specializes in non-QM loans. And what we do on this show every morning is go through some live mortgage rates for some different programs. And then we do a deep dive into a different topic each day. Today, we're going to be talking about the new FHA loan limit. So our sales manager, Jose, with 28 years of experience, is going to talk about those new loan limits. But first, we'll do what we do every morning, which is pull up the live rates. So Nick, if you're ready, let's go ahead and pull up our pricing tool and see what the rates are looking like today.
All right, let me switch my screen and we'll check it out. So as Kyle mentioned, this is our pricing tool for our team of mortgage professionals. This will show us the general rates and the APR for today. It is November 30th, just after 11 a.m. Eastern, so all of our general programs are live. If you'd like a full breakdown of all the fees that go into the APR, a full loan estimate, please get with one of our team members. We have over 400 licensed loan officers in 24 states. For our demos today, we always set up a basic scenario so we can compare across the programs. So we'll set up a loan amount of $400,000. We'll set the LTV to 80% loan, 20% down payment. We're going to have the computer find the lowest rates we can offer for conforming conventional. Then we'll check out FHA, which is our topic for today. And then we'll go into our expanded guidelines, also known as non-QM, where we have over 5,000 additional programs that can use alternative income. We also have VA. VA is only for our eligible vets and active service members. If you are, let us know. And we also have USDA, which is only for our properties that are in eligible areas. If you do happen to be looking, just let us know. We'll start with conforming conventional. We'll do a purchase, 30-year fixed loan, primary occupancy, single family home, 1 unit, state of Florida, county Miami-Dade. And for all the demos, we use an estimated credit score of 760 and an estimated debt to income ratio here of 40. So with these settings, as we do every day, let's check out the options. And it looks like it's actually even lower than yesterday, which is great. We love to see the rates go down. So 6.625, 2.125 discount points and cost puts the final APR at 6.891. Remember yesterday, the APR was 6.9 something, just under 7. Now it's even lower, so we love to see that momentum. Hopefully this continues. We did have some pretty good news this morning come out. Now, if for any reason our customer doesn't qualify for one of these conventional options, typically we want to compare next an FHA program. So we'll set up the same exact scenario. Even though FHA allows a little more leniency on credit issues and a much higher debt to income ratio, we'll keep everything exactly the same so we can compare apples to apples here, a conventional to an FHA option. Ooh, and FHA hasn't gone down too much, so they're actually very close today here. So 5.75, we love to see fives, absolutely amazing. 2.25 discount points and cost puts that final APR for the FHA here at 6.804, almost identical to conventional today. So our customer that qualifies for both definitely has a toss-up. But our customers that must use FHA, definitely some welcome changes. These APR do include the MI, the upfront MI, and monthly MI. That is typically the higher cost here of FHA, but the loan overall, definitely a great deal. Now, where we love to specialize and where unfortunately many other banks or lenders have to deny our customer if they don't fall into a conventional or FHA program, we have over 5,000 additional loan programs, so we do not have to deny our borrower. So under expanded guidelines, we have over 5,000 options using alternative income. So everything else will stay exactly the same here as our other demos, but now we can choose a new income option. So if our customer, for some reason, doesn't qualify using full doc, which is 2 years of tax returns, that's what's required for FHA and conventional, now we have all kinds of other options to select from. We have asset-related programs, business bank statement programs. The investor programs are just for investment properties. Personal bank statement, here's the most popular. That's what we use today. We also have RSU, stated income, VOE, 1099, P&L, no income CDFI, and we do episodes on all those different types. Please check out some of those past episodes. So the 12-month bank statement program is our most popular. That's what we use for the demo, and that's for our self-employed borrowers. Many times our self-employed borrowers are the ones that have various reasons why they may not qualify with their 2 years of tax returns. So we solve that problem here. No tax returns at all, just their last 12 bank statements. And we determine a debt-to-income ratio here of 40% using no tax returns at all, just the cash in the bank. So usually our self-employed borrowers can qualify for much more income and can therefore get that home they really want. So let's check out the bank statement options. All right, gone down a little bit, but we are not beating conventional. We were for a while there. So best option here at the top, 7.5 rate, 2.375 discount points in cost, puts the final APR at 7.923. So it's under 8, which is awesome. And our conventional is about 1 point lower there. So that's about typical. Our customers that can qualify conventional, that's awesome. And our customers that need a little bit extra help here, we have some amazing options at great rates here for our bank statement. Now, if you scroll down this list, there are dozens of versions here. Some of these at a little higher rates and costs may allow bankruptcies, foreclosures, other credit issues that would cause us to not qualify for a conventional loan. And some of these may allow us to use different ways to calculate our income. So tons of options here. Please get with our team on the best ones for you. And let's get back to our pricing tool. And we want to do our final couple demos here for investment properties. So we'll select investment property. We'll set up the same exact scenario, 80% loan, 20% down payment. And we'll search for the lowest rates we can offer for our conforming conventional programs. And we'll compare that to our expanded guidelines, also known as non-QM. Remember, the government programs, FHA, VA, USDA, do not work for investments. So we'll do our conforming conventional option first. Everything the same as our other demos. The only difference here is investment. So we can see the adjustments we have for investment properties here. All right, and again, the conventional rates are looking great. 7.374 rate option here, 3.25 discount points in cost, puts the final APR at 7.779 for an investment property. We were way up over 8 there for a while for investments, and we were even beating conventional with DSCR for a while as the rates went crazy. Now conventional is back in action. Those customers that want to take advantage, definitely look at these programs again. And we can scroll down here, see if we can find our portfolio option is now just keeps going down, right? It's the same price. It's been the same price for the last 3 weeks. It was beating conventional by a long shot. Now it's in about 12th place. But remember, these portfolio options are great options that avoid a lot of the volatility here. And for our final demo, we will do investment property, 80% loan again. And this time we'll find the lowest rate options for our non-QM programs. So for an investment property, the most popular income is the DSCR option. That's our most popular loan by far here at the company as well. That's because it doesn't require any income or employment or documentation of income and employment. We simply use the estimated rental income from the property to determine a DSCR value. It stands for debt service coverage ratio. If the estimated rents can cover the PITIA of the mortgage, aka the property cash flows, that's a ratio of 1 or higher. We even have options for ratios under 1 where the property may not quite cash flow. For the demo, we use 1.5 so that we can see all the options here as the highest value the computer uses. And prepayment penalty must be selected for a non-QM investment property. 3 years is standard. There are options for no prepayment that will cost more and limit what shows up here. There are also options for 5 years, which does limit what shows up, but does save some money for our customers if they want to keep the property long term. 3 years is standard. That's what we'll use here for the demo. So let's check the DSCR options this morning. All right, best option here at the top, 7.5 rate, 3.25 discount points and costs, puts the final APR at 8.020. So DSCR right now, less than half a point more than conventional, which is pretty good. We were beating conventional with DSCR for a while, which was absolutely amazing. But now our customers may consider both. I would still say 90+% of investors will take a DSCR loan when it's only a slight bit more. Most investors consider DSCR loans much more flexible and preferable. You can do 1, 2, 5, 10 loans at a time, refinance properties, purchase new properties, and no employment or income. And if we scroll down here, there are dozens of options. Some of these at higher rates and costs. Again, may allow bankruptcies, foreclosures, other issues, may allow different ways of calculating income. Very popular request we have right now for short-term rental properties to be used and use the short-term rental income. So lots of different options here under DSCR. We also have some episodes where we talk about our mixed use version. All kinds of different properties can use these programs. Now let's get back to the news for the week, which is the new loan limits. So put up the slide again here. FHA. So FHA, again, primary only, right? This is a government program. FHA has new loan limits because conventional has new loan limits. So when conventional loan limits came out yesterday officially, now the HUD can adopt their version, which is a percentage of the conventional loan limits, and they have a little bit different chart and way they analyze the limits there. So Jose, if you want to take over, hopefully we can talk a little bit about the chart here and explain how it works like we did yesterday, and then let's go into some examples if you can, please.
All right, sure. Why don't you go ahead and share my screen? I have the new chart pulled up. This is from HUD.gov. And keep in mind, okay, this says forward mortgage, right? That's our regular mortgage. And then you have your HECM mortgage, which is the reverse mortgage. So you see there, they have the low cost area, which actually is a little bit misleading. That's just their regular pricing. This is called their regular loan limits as opposed to the high cost area loan limits. Fannie and Freddie call those high balance loans. FHA calls it high cost area, where they're looking at, they are accounting for higher costs of construction. Now, keep in mind, this is county based, correct? Unfortunately, it's not based by census tract, which may tighten up the scope a little bit, because we know in some areas that's not exactly accurate. You could have some areas that are a little bit very wide spectrum, where you could have, really low cost areas and really high cost areas like 50-50. So that's just the breaks. But we're looking at one unit there, 498, 257, roughly 20 something thousand dollars higher, 30 something thousand dollars higher than the regular limit. Then you got 2 units, 3 units, and 4 units. Now look at the big difference between the low cost area and the high cost area. It's more than double in some cases. So quite a big difference, how they could figure that part out. So now what I will state is that for today, the examples I have for you are the new low cost area limits, because the pricing engine, Optima Blue, has not yet been reconfigured by the investors with the new high cost area limits. So today what we have to share for you are the new limits, low cost area. So for our 1 unit, 96.5% LTV max for the purchase, you're looking at 498, 257 as our limit. It's nice to see something with a 5 in front of it again on those rates. You're looking at 6.75 with a little bit of a lender credit as our lowest cost option. And you can buy that down to 5.875. And keep in mind, there are lower, like I always like to mention every show, there are lower rate options. You would just then need to run it through a compliance test to, for points and fees to make sure you're okay. And if you have seller paid closing costs, then any seller paid closing costs as properly coded in your itemization as a seller paid closing cost will not be counted in the points and fees test. So if you have a 3% seller credit, those 3 points could go to paying loan discount, right? And you could then buy it down considerably more than what you see on that chart. And here's our 2-unit new loan limit of 637,950 for our 2-unit 96.5% LTV. Again, we're looking at the same rates here for the 1-unit and the 2-unit. 3-unit pricing, little bit different there, just slightly. Let me see. We're looking at it's about an eighth of a point in the upper end, and actually in the lower end is 6% is a little. It's about the same in the lower end of the rates. So 6.75 with a little bit of a lender credit, and 6% is our lowest rate option. And for our 4-unit property, that other one was a 3-unit, 4-unit new regular loan limits, 958,350. And we are again looking at just the same rates we just had for the 3. For the 4, 6.75 lowest cost option, 6% lowest rate option. And some cash out refis now at the new loan limits. Remember, FHA cash out refi limit is 80%, was 85% before the pandemic, but things changed and they have kept it at 80%. So here, 6.75 is our lowest rate option, and 6.75 lowest cost option at par. 6% is our lowest rate option, costing 2 points. And our 2-unit property, we can actually buy this one down to 5.875. So we have the same 6.75 at par and 5.875 lowest rate option. Our 3-unit, 80% again, 771, 125, 3-unit loan limit. We are again 6.75 lowest rate option, lowest cost option, 6% lowest rate option. And our final example for our house hackers out there, right? Our 4-unit cash out refi at 80%. Pretty amazing there. 958,350 is our new loan limit there, and it's 6.75 lowest cost option and 5.875 lowest rate option. So pretty exciting times here with these loan limits getting increased. They're keeping up with the inflationary pressures so that our primary borrowers, especially here, can benefit and try to find housing, right? There's a housing crunch right now for primary residences, and they are trying to assist.
All right. I don't see any questions. Sounds good. All right, cool. Well, remember, we do this 11 a.m. Eastern every weekday where we go through the live rates and then do a deep dive into a different topic. We actually do not have a show tomorrow because we're getting ready for our big event in Miami, Real Estate Weekend Miami, realestateweekendmiami.com. Hopefully we will see some of you there, but we'll be back Monday. So thank you, everybody, for tuning in. We'll see you Monday, 11 a.m. Eastern for the next episode of Daily Rates Live with the Mortgage Calculator. Have a great day, everyone.
Thanks, everybody.
Thank you, everybody.